The top stories live from the Sky News City studio. The chair of John Lewis faces a confidence vote as the business considers radical ways to secure its future. The travel revival. The world's biggest tour operator, TUI, says bookings this summer will be close to pre-pandemic levels. The race to cut emissions, a synthetic fuel that can be used in existing engines with no loss of performance. Plus, the open source rival to ChatGPT. I'll be speaking with the chief executive of Databricks. Good morning, this is Ian King Live and our business and economic news from the heart of the city. Now, the chair of the John Lewis partnership, Dame Sharon White, is facing a confidence vote by members today as she fights to turn around the retailer's performance. The partnership, which also owns the Waitrose supermarket chain, posted a pre-tax loss of £234 million last year, and in March it cancelled its treasured staff bonus for the second time in 3 years. Well, Dame Sharon has been looking into ways of bringing more capital into the partnership to strengthen its position, including property deals and even potentially selling a stake to outside investors. But that has sparked anger among the partnership's owners, its employees. Well, joining me now to talk about this is the Sun's business editor, Ashley Armstrong. Ashley, welcome to you. This vote is by the John Lewis Partnership Council. Now, what is this body? Yes,
so it's not the first time that a chairman or chairwoman of John Lewis has faced a confidence vote. It's very much kind of part of the employee-owned principles of the mutual. And actually, Charlie Mayfield, Sharon White's predecessor, had 2 votes. He won both of those. And actually, his predecessor, Stuart Hampson, when he was thinking about a demutualisation of John Lewis and potentially floating it on the stock exchange, he also was facing some rumbling on the council. These council meetings are meant to be very lively debate that hold people to account. But the thing is that Sharon White is going into this in a very testy time, as you said. You know, it's rankled a lot of John Lewis's employees about kind of potentially bringing in an outside investor. It comes on the back of a $230 million loss, 16 department store closures, and also this sense within the partnership that what it was known for, customer service, that very essence of John Lewis seems to have been fading because of all the cost cutting.
Now, there are 61 members on this council. Who are they?
Yeah, they're elected themselves, and they all go through this kind of special training because there was this sense that they might be overawed by kind of these board meetings. So they go through kind of a due diligence setup, and they are elected officials, I suppose, kind of from within different bits of Waitrose, different bits of partnership, and they're meant to kind of represent the whole of the kind of retail group.
Yes, so these are genuinely people who work on the shop floors.
Yes, exactly. And what's interesting is in the previous votes that we had with Charlie Mayfield as well, when people voted against it, it wasn't almost like that they disliked him. It was like that they wanted to have their faith restored in the partnership. It's a bit of a kind of protest vote. And, you know, John Lewis was very much at pains, and it has been at pains. You know, this isn't a binding vote. But I think it is still symbolic in the same way that if MPs vote, for example, for a knighthood to be stripped, you know, they don't have the power to do that, but it sends a message, doesn't it?
Yeah, so it is non-binding. But the message is often acted upon, or is it?
I mean, so far, there hasn't really been kind of a chairman that's lost. And I think that's very, very crucial. It's kind of, you know, where Sharon comes out on this. But also, I think, you know, there is this kind of reckoning within the partnership who is qualified to do this job, because John Lewis is an anathema to most other British businesses, and at one point it was put on a pedestal because of that, because of its employee-owned model. But, you know, it's a bit like M&S with department stores and food, but it's also now trying to do lots of other things with housing. So who is qualified to run John Lewis?
It's a very good question. I mean, the point is here, if Dame Sharon loses this confidence vote, it doesn't get away from the fact that this business does need to raise more capital.
Absolutely,
it can't borrow anymore. Nope. So it's either going to have to sell down assets like properties or potentially bring in outside investors.
Yeah, and I think it is really interesting. That has been the thing that's been central question of kind of what John Lewis does. And it's been OK so long as it's been the cash machine. But what we've seen and during the pandemic and before that, as its store sales were declining and it didn't move fast enough with online. Online is actually really hard to make money out of, you know. People talk about it as being the silver bullet for the high street, but it's not at all. So then how does it raise money? It can't list on the stock exchange. It actually would require an act of parliament to sell the business. An outside investor is definitely something that Sharon White has had on her cards since joining. It has been kind of mumbled around and talked about. And at one stage, she was even considering a merger with Marks and Spencer in her early days. And to be fair, that was kind of when Marks and Spencer's share price was in the doldrums and probably slightly more affordable. Now, I think that's well off the table.
Yeah, she'd have been buying at the bottom if she'd done that, wouldn't she?
Yeah.
I mean, you raised a good point there. Is there anyone actually that could be doing a better job than Sharon White?
Well, the thing that is lobbied at her frequently and has been lobbied at her since the start is that she is not a retailer. You know, she came from Ofcom, and actually she surrounded herself with consultants, you know, Pippa Ricks, who was brought in from the Co-op and a turnaround veteran, she is off. Now we've got a new chief executive who, you know, is great in consumer, but still not a retailer. I think actually one thing that would be a really big signal to the rest of the kind of partnership employee base would be if they got an out-and-out operator retailer, you know, someone almost with a cut and thrust of knowing the price and being able to walk through the sort of food halls and department stores, knowing exactly how much everything costs and having a real grip of it.
Have you got anyone in mind?
No, as we know, there's a kind of, you know, sadly a few characters that have been lost from the retail space, and probably maybe for good reasons. It's like, you know, we want them to be character, we want them to be personality, but they also need to be modern now because.
Yeah. And they don't come cheap either.
And they do not come cheap, especially if you're kind of looking abroad as well.
Absolutely, Ashley. Good to see you this morning.
Really nice
Thank you.
to see you.
Some other business news stories for you now. And Compass Group hailed strong growth in both Europe and North America as it benefited from the return to the workplace and a revival in sporting and other live events. The world's biggest contract catering company reported an operating profit of £1.05 billion for the 6 months to the end of March on an underlying basis. That was up 41% on the same period a year ago. Well, Compass, a major provider of meals at schools and colleges around the world and at employers such as Google and Shell, said it would in future be reporting in US dollars rather than sterling, reflecting the fact that 2/3 of its sales now come from North America. But it stressed it had no plans to move its stock market listing from London to New York. The shares are up 4% right now. TUI said this morning that bookings this summer would be close to pre-pandemic levels as it predicted significantly higher operating profit this year. The world's biggest tour operator said that bookings this summer were up 13% on last year, while summer 2023 bookings during the last 6 weeks have been some 6% ahead of 2019 levels. Well, the company reported an underlying loss of €42.9 million for the 3 months to the end of March, a quarter in which it is traditionally loss-making, and that was down from a loss of €123.1 million a year ago. Shares of JD Wetherspoon have shot up by more than 7% this morning after the pub operator predicted its annual results will be at the top end of City expectations. Wetherspoon said its sales in Easter week were the best in its history, with sales in the current financial year also likely to be a record. It said its trading over the May bank holiday weekend had been exceptionally good, including its busiest ever Saturday, but it said the coronation weekend had been slightly less strong. Like-for-like sales in the 13 weeks to the end of April were up 9.1% on the same period in 2019, prior to the pandemic. And losses at ASOS have widened as the online fast fashion retailer ran up exceptional costs related to its reorganisation. The company reported a pre-tax loss of £87.4 million for the 6 months to the end of February on an adjusted basis. Well, that compared with a profit of £14.8 million during the same period a year ago, and largely reflected one-off costs of £203.5 million, including stock write-offs and property impairments and closure costs. Sales fell by 7%, which ASOS said reflected a deliberate decision to reduce markdowns and focus on more profitable sales. It said it was continuing to win market share among key demographic groups such as 16 to 35-year-olds in the UK. And National Express is changing its name to Mobico Group with effect from next month. The bus, coach and rail operator said the Mobico name better reflects the group's international nature and its diverse range of mobility services. The National Express brand first began appearing on coaches in Britain 51 years ago as a name that could be used by a number of state-owned local bus companies that also operated coach services. Well, since its stock market flotation 31 years ago, it's diversified into other modes of transport. The company stressed that the National Express name will still be used on its UK national coach network. Well, last night's sell-off on Wall Street was followed by declines overnight for equities in most of the Asia-Pacific region. In fact, Mumbai was the only market in the region not to finish lower overnight. Well, in Europe, stocks are also largely in negative territory this morning. There's the current picture, all the main continental European indices in negative territory right now. Talking points this morning include Crédit Agricole. France's second largest bank is ahead some 5% in Paris on better than expected quarterly results. Well, here in London, the FTSE 100 is also in negative territory. It's off nearly 0.25%. The drug majors are weighing on the index today. There are some gainers to mention, though. The leading blue chip gainer right now is Melrose. It's been up as much as 7% this morning on a trading update, which, as Sky's Mark Kleiman reported yesterday, it has pledged to focus for now as a focused aircraft engineering group. In the same sector, Rolls-Royce is ahead by 1.75% on growing optimism around aviation. Outside the FTSE, the annuities specialist Just Group is up 5.5% right now on positive broker comment, but ASOS, mentioned them a moment ago, they're off some 12.5% on those results. On the foreign exchange markets, well, it's pretty quiet this morning. That's ahead of US inflation data out later today. Sterling more or less unchanged against the dollar. It's ahead by 0.1% or so against the euro. The single currency, meanwhile, off by a similar amount against the greenback. As for the oil price, well, that has fallen following an unexpected rise in US crude inventories. A barrel of Brent crude will currently cost you $76.26 a barrel. That is off 1.5% on the session. Joining me this morning is Rachel Winter. She's a partner, of course, at Killick & Co. Rachel, good to see you this morning. Let's start with Compass, biggest of the businesses reporting today, and some really, really powerful results, you might say.
Yeah, great results here. So this is the world's biggest catering company. So they provide food for offices, schools, hospitals, sporting venues. And what they found is their demand has been particularly high because people are returning to the office following a lockdown. They're finding that lots of companies are wanting to offer their employees free food to try and entice them back to the offices. And they're also finding that because of problems with inflation, finding staff, they're finding that a lot of companies are now wanting to outsource the provision of food rather than doing it themselves. So they really have done very well with new business as well. So all things considered, they have been able to increase their outlook for the full year.
Yeah, really interesting point they make in the statement there, Rachel. I thought that there's still masses of growth to go for. Lots of companies and employers and indeed colleges and so forth have yet to outsource their catering. When they do, that is a massive opportunity for this business.
It is, absolutely. I think this is a huge market, so the opportunity is massive. And it's also a very international business. So as you said earlier, about 67% of their revenues come from the US. I think there's a lot more scope to grow there. So there really is a huge amount of opportunity for this business.
What did you think about the announcement that they're going to be reporting in dollars from now on? I mean, presumably that means divvies are going to be paid in dollars as well. It makes it a bit of a currency play for UK investors.
It does. I think it makes a lot of sense. I mean, with 2/3 of their revenue coming from the US, I think it makes sense to report in dollars. I think the problem that a lot of UK listed companies have is that if they report in sterling and they earn lots of money in dollars, because the exchange rate can be quite volatile, that then makes their profits look quite volatile. So I think it does make sense to report your profits in the currency in which you're earning most of your revenues.
Now, what have you made of these numbers from TUI today? I mean, we've often heard it said that holidays are the last thing consumers will give up when times are tight. I mean, this statement kind of confirms it, doesn't it?
It does. So I thought it was quite interesting that prices are 26% higher this summer in comparison to 2019. And yet that doesn't seem to be stopping people from booking. So TUI does seem to be experiencing very strong demand for holidays. So I thought the update looked quite positive, but the shares are down quite heavily today. So I think people are still quite concerned that the company is still loss-making. And also TUI still has quite a high level of debt, despite the rights issue they completed a couple of months ago. So I think those concerns are still weighing on investors.
I mean, there really is a sort of confident buzz around aviation more broadly just now. I mean, we had that mammoth blockbuster deal yesterday, Ryanair ordering $40 billion worth of aircraft from Boeing.
Yes, absolutely massive. So there does seem to be a huge demand for going on holiday. And I think that's not surprising, given that we've had a couple of years of lockdown. People have been prevented from going away. And I think there is a lot of pent-up demand.
Now, what about Wetherspoon's numbers? Again, I mean, consumer confidence is supposed to be fairly shaky at the moment, not according to Wetherspoon.
No, great results here. So they are expecting this to be their best ever year for revenue. They have said it's thanks to a couple of very strong bank holiday weekends and also the Easter weekend. So they have been taking in a lot of money. I think that's partly because inflation is particularly high for food and drink. So that means that the rate of sales for Wetherspoons will be higher because of that. But I do also think we have got clearly a cost of living crisis at the moment, and Wetherspoons is a lower cost operator, and therefore I think it probably is picking up some business from people trading down.
All right, Rachel, got to leave it there. Good to see you this morning. Thank you.
Thank you.
Now, it sounds almost too good to be true, producing synthetic fuel in a completely fossil-free process that can be dropped straight into the existing engines of cars, aircraft, commercial and agricultural vehicles, and with no loss of performance and no need for engine modifications. Well, that's the claim of Zero Petroleum, a British startup which has already demonstrated the fuel's effectiveness in a test flight carried out by the RAF in November 2021. I've been speaking with Paddy Lowe. He's Zero's founder and chief executive.
Well, it's not really a trade secret. It's really exciting. You just make fuel from air and water. And that may sound extraordinary, but when you burn any kind of petroleum fuel, so gasoline, petrol, diesel, jet fuel in aircraft, what comes out the exhaust is burnt hydrocarbons. So that's carbon dioxide, which we know is a problem in the atmosphere, and water. So all we're going to do is take those exact emissions, carbon dioxide and water, and turn them back into fuel. I mean, it's that simple, but in another way, obviously not simple, but it's chemistry.
Yeah, I was going to say, if it was simple, someone would have done it by now. Why hasn't this been achieved earlier?
Well, in some essential forms, it has been done before. There's a process called Fischer-Tropsch, which was invented 100 years ago in Germany. So that technology has been used for many years to turn coal gas, which was the old gas in our network, into liquid fuels. So the essential synthesis has been around a good while. But of course now it's coming into a new lease of life with a new intent, which is to become free of fossil fuels and fossil carbon. The problem in the atmosphere is not carbon, it's the fossil carbon. And so in this process, we're circulating the same carbon from the atmosphere, not bringing new carbon out of rocks, which is the problem of global warming.
So it's carbon neutral. I mean, in terms of the carbon output compared with conventional fuels, there is none. This is just carbon being recycled, essentially.
So it's exactly the same carbon out of the exhaust pipe, but because you used carbon from the atmosphere to make that fuel, then it is completely neutral. And incredibly exciting, because if you think into the future, when we're growing up now in the tail end of the fossil fuel era, and there's a lot of guilt around that, with most people, should be, because of the problems that that's causing with imbalance and global warming. But, for me, that's just a transition to what will be indefinitely sustainable with synthetic fuels. And there's a great endorsement of that. If you think I'm a crazy guy who just got on the show, synthetic fuels have just last week been endorsed by the EU with a scheme called Refuel EU. Refuel EU mandates synthetic fuels in European aviation to some really high levels, so up to 35% by 2050. So it's a known thing, and we Zero are one of the players in that space that's now mandated by European law.
And of course, you've already proved the technology works because you did a pilot with the RAF more than 18 months ago now.
Yeah, November 21, we flew a plane, or rather the chief test pilot of the RAF flew a plane, an aircraft, with only our synthetic fuel on board, and that secured a Guinness World Record, so we're very proud of that. And really that was a great demonstration that this isn't just a paper idea, this is a reality. You can run real engines exactly the same, but on a carbon neutral fuel.
What sort of interest are you getting from, for example, the car manufacturers?
So the car automotive sector has been an interesting one, because clearly they've been aiming for all electric, again by mandate. So it's not a sector we've put a lot of attention to. But again, the EU, you may have seen, just concessed allowance of e-fuels. E-fuel is another name for a synthetic fuel in Europe, to continue manufacturing ICE, internal combustion engine cars, beyond 2035, provided they use synthetic fuels. So automotive sector is again in scope for us, although we would say it's not our primary focus, because electric cars are also a very good solution in that sector. But most other sectors, aviation, agriculture, marine, general industry, anything mobile that has to carry a lot of weight or endurance, synthetic fuels are actually often the best answer and very often the only answer to defossilise the process.
And what about the manufacturing infrastructure? Obviously, producing conventional fossil fuels that power aircraft and cars, it requires vast refineries. Presumably something similar is involved here, is it?
It is a capital-intensive industry because you have to build a machine that makes the fuel. But in another way, it completely changes the paradigm. So we're used to oil companies are people that go and find oil in really difficult places that get more and more difficult every year. The great thing about synthetic fuels, and it really is a new paradigm, is that you build a machine, you can own it and make your own oil, in effect, in your own backyard. So that brings all sorts of different thoughts, energy security, price security, lack of, no need for long distance transport, pollution in marine pollution, but mainly about that security. You own a machine, you make your own fuel. It is not something that's possible today in the fossil fuel sector.
That was Paddy Lowe from Zero Petroleum. Well, still to come here on Ian King Live, we're going to be speaking with the Chief Executive of the data processing and analytics platform Databricks about its rival to ChatGPT. Stay tuned.
They are overwhelmed just like we are, and the thought that they might have more and more work coming their way is something that doesn't fill them with tremendous excitement. I think there are some things that can be dealt with very easily on the telephone. I think uncomplicated urinary tract infections in women is the perfect telephone consultation, and it doesn't need a pharmacist or a GP. That can be done very easily and straightforwardly. So I think the message is very mixed as far as we're concerned, and it all comes back to this whole issue about capacity, doesn't it? We are overwhelmed. General practice is overwhelmed. My pharmacy colleagues are overwhelmed. They remember the terrible times during COVID when really they were the only open face-to-face clinics around because we were all shut, not seeing patients face-to-face. So they do an amazing job. And yet I gather that hundreds of them are closing each year because they just can't make ends meet. I can tell you that in our first half hour of opening this morning, we took 174 calls. At one stage, 45 people were waiting to see us. I'm pleased to say that we've got the call queue down to 15 now, 250 calls in. But it is hard work doing this. And yes, digital phone calls are very good at producing a queue, but you've still got to provide the stuff that patients need once they've made the phone call. At the moment, it's the average 10-minute consultation is an impossibility. A very droll GP, one of our rags, actually worked out that you could actually spend an hour and a half talking to somebody about something not very complicated. Every patient that comes to see me, I think, is thinking that's the last time they'll ever go and see me. And so they're planning for the rest of their lives. So consultations are very long and very complex. And then the demand is so huge. So we have a huge capacity issue.
Welcome back. Now, interest in artificial intelligence has mushroomed since the recent launch of ChatGPT, but some companies have been active in the field for quite some time. One of them is Databricks, a data processing and analytics platform that uses AI, which was founded a decade ago. It recently launched Dolly 2.0, named after the cloned sheep Dolly, which is its own open source rival to ChatGPT. Well, joining me now is Ali Ghodsi. He is the Chief Executive of Databricks. Ali, good to see you this morning. You launched Dolly 2.0 only weeks after the launch of Dolly 1.0. Why the haste?
Well, I mean, the space is moving so fast, and there are new results every week, frankly speaking. So, it's just the pace of things right now, actually. I follow this stuff on a daily basis now.
And what, without getting too technical on me, what are the main differences between Dolly 2.0 and ChatGPT?
Yeah, actually, there's so many of these released out there, but you can't actually commercially use them. And the reason is most of these models have been trained using output that comes from ChatGPT. And the terms of license of ChatGPT says you cannot use its output to create something that competes with it. That's against its terms. So DALL-E 2 is the first model ever that's actually, you can speak to it and it can do those kind of things, and it's commercially usable. It's not tainted. It's not using any OpenAI output at all.
And the key thing is it's open source.
Yes, it's open source. You can verify, what was it trained on, what does it do? You can really understand it, which you can't do with these models that, for instance, OpenAI provides, because they're behind an API. You don't have access to the model. You don't know what's there. All you can do is ask questions and see if you like the answers or not. But you can't actually look inside and see what's under the hood.
Does the fact that it's open source potentially mean it's more open to misuse?
Well, I think it's also more open to researchers understanding it and training new versions of it that is better aligned to what we humans want, so that it is more honest, it is more helpful, and that it's harmless.
I mean, some people say that this is the issue with ChatGPT. It almost goes out of its way not to offend. Is there a danger that DALL-E might offend some people with its answers?
Yeah, but it's a research vehicle that we can use, right? DALL-E is not something that we put out there that anyone can go use and chat with, right? So it's more for enterprises to figure out, for their use cases that they have, they can train DALL-E to do specific tasks that they need for their companies, right? So it's more intended for businesses than for consumers.
And I think you're going to be licensing it out at around $100 a throw, is that right?
Yeah, you can train it with less than $100, yes, in a few hours.
How many licenses will you need to sell then for it to pay for itself?
Well, we didn't spend much effort to build it. So yeah, it's kind of already paid for itself.
Okay, right.
Yeah.
What sort of take-up have you had thus far?
So many people are using it. We didn't actually know. We didn't know that it would have such uptake, but all kinds of use cases that we couldn't even imagine. People are using it to read electronic medical records, to understand diseases, right? People are using it to read insurance documents, to understand risk. People are using it to translate, press releases to 80 languages in just one shot, and so on, things like that. So there are a lot of interesting use cases.
I mean, this is the thing about AI. It's almost pushing at things that we don't properly understand. I mean, that's a concern that's often raised about it.
Yes, so I think I actually welcome, if we look at things like EU AI Act and so on, I think these are early days. Definitely this kind of technology will change the world, do great things. I think actually it's going to revolutionize healthcare. I think we're going to be able to solve all kinds of diseases and cure them. I think it's going to be amazing for education. We're going to be able to, everyone will have their own professor, that can help them understand, learn any subject they want. I think actually scientific breakthrough will be amazed. We'll have great things happening there. But people can also use it for bad things, bad use cases. It's technology that makes anyone more effective. So people who want to do great things, they can do it much more effectively. People who want to do bad things, they can also do it more effectively. So we need to regulate it, of course.
Well, of course. But I mean, yeah, there is this, Ian Hogarth in the FT wrote a couple of weeks ago, he was talking about godlike AI that potentially threatens the whole of the human race. Is that over-egging it?
Yeah, so I think there's two separate problems, and they get confused. So one is this kind of like godlike AI that takes over everything, Skynet and so on. I don't think that's a big risk. Okay, of course, it's scary, but it's not a big risk, because we're nowhere close to building anything that's like that. We just have a parrot that repeats back what it's seen by compressing all of the web. So it's a very good, smart parrot with great memory, and it can combine things and synthesize them, but it's not like a human. So I'm not too worried about that problem. But the existing technology that we actually have built itself could be used, like if you want to create spam and things like that. So there are high-risk use cases, and those are the ones that are being actually regulated, for instance, by the EU AI Act, and I think that's good.
And what about this bonfire of white-collar jobs that it's going to lead to? Is that exaggerated?
Well, I think many jobs will change. I think we still want a human in the loop. Do you want to go to the doctors and just talk to a robot that just tells you that, we're going to chop your arm off? Like, you want to have a human there that explains it. Do you want to send your kids to school with just robots? No, of course, we want a human teacher there. So I think we still want human in the loop. If you look at, for instance, in an airplane, we have autopilot. But would you want to fly a plane that has no pilots in it, right? So we still want a human in the loop, and I think the human will still be there as a guardrail. And I think the nature of jobs will change, and there'll be new jobs that pop up that don't exist today. We don't know exactly what they are. So I think it will create also jobs. But yes, it's going to change the nature of existing jobs.
What did you make of this call from some tech leaders, including Elon Musk recently, to pause AI development for 6 months?
Well, he said, can you please pause this? I'm building my own for 6 months. So that sounds like a smart idea. But 6 months is not going to really change anything. And since this is all out in the open, the genie's out. Researchers all over the planet are working on it. So, this 6-month moratorium doesn't really change anything. So I don't think it actually affects anything.
Now, since we had you on the programme last a couple of years ago, you completed another funding round in August 2021. That valued you at $38 billion. Would you be valued at that sum if you were doing another raise today?
Well, no one really knows, right, until you go out and do that. But there's a lot of excitement around AI. And I think the things that you could do with Databricks, you can now do even more effectively using these large language models. So I think the use cases have actually, exploded for our technology, and companies are coming to us. So every CEO I know is asking, what does this mean for my company? What should I do about it? Tell me the strategy. How do I, can we please sit down? So I think it's going to be great for our business. I don't know exactly what value I would put on it.
Do you need to raise capital anytime soon?
Not really. I mean, we raised, $2.5 billion in a short period of time. So we still have most of that capital and we're fully funded.
Plenty to go. Ali, I could talk to you all day, sir, but we've got to leave it there. Good to see you this morning.
Thank you.
Still to come here on Ian King Live. Why Citroen is targeting the Indian market to drive growth outside Europe. Don't go away. Welcome back. Now, supply chain challenges dogged both the manufacturing and sale of new cars in Britain last year. New car registrations during 2022 were down 2% on 2021, with sales of petrol cars down by 10% and diesel by 39%. In the first 4 months of this year, though, new car registrations have been solidly higher. It was to this backdrop that Vertu Motors, which also trades under the Bristol Street Motors and Macklin Motors brands, today announced an adjusted pre-tax profit of £39.3 million for the year to to the end of February. That was down from £80.7 million the previous year and reflected a big increase in costs. Sales were up by 11% to a record £4 billion. The share price is currently ahead by some 3%. Well, joining me now is the Chief Executive of Vertu Motors, Robert Forrester. Robert, welcome to you. Before we talk about the business in more detail, just talk to me about the headline profit number, if you would, please. Why did it drop at the headline level?
Well, last year was a completely exceptional year for the motor retail sector. We saw a massive increase in used car values. And when you're sitting on £170 million of used car stock, the margins on used cars went up. That was always going to be an extraordinary year. This is actually our second highest profit that we've ever made. And if you took that last year out, it would be a record year. So we're delighted with the numbers this year.
Good. Now, what about car price inflation right now? I mean, I see from the SMMT today, they're still talking about significant used car inflation.
Yeah, I think used cars have stabilised, if I'm honest. There's small growth, but we're probably, our average sales price is around £2,000 higher than it was this time last year. But we're not seeing the explosions we saw last year. It's broadly stable now. And I would imagine we'd get back to something like normality over the next 18 months, where used car prices month on month would actually drift down in normal times.
And what about new cars? What are you seeing there?
Well, as you said in your preamble, we've seen an increase in the new car market for about the last 9 months. The semiconductor issues, logistics issues are being worked through. The SMMT, which is the manufacturers, increased their forecast for 2023 to 1.83 million, which is higher than 2022, but a long way down from the halcyon days of a 2.3 million, even a 2.6 million market. So we're still in quite a constrained supply position.
Now, what about the competitor backdrop? A lot of the new kids on the block, these online guys like Kazoo, are having to rein in their ambitions. What do you take away from that?
I take away what was obvious from the start, which is pure online retailing of cars is a very, very minor item. We've actually been doing it in our business since May 2017, and we sell on average 8,000 used cars a month, of which about 100 are sold purely online. People want to touch and feel, they want to see a used car, make sure it suits them. And the number of people who actually want to do a pure online transaction with nobody talking to them is minimal. And this is a reflection of reality and what's happened to the online disruptors.
Now, being acquisitive is in the DNA of your group. You completed the acquisition recently of Helston Garages. How's that trading?
It's trading really well. We bought it in mid-December. In January, we sent lots of people down to the southwest. We've rebranded the businesses, got all our systems and processes in. And the business has traded really well. So we're delighted with that. We can probably do some more growth and acquisitions in the coming months on the back of that success.
What sort of things are you looking for in acquisition targets right now?
Well, we are a franchise business, so we work very closely with the manufacturers, and actually they work with us in finding our areas for growth. We have to get permission from manufacturers to buy businesses, so the manufacturers are working with us on identifying targets. As you said, we bought nearly 200 dealerships in 15, 16 years. So people do contact us if they want to sell their business, and then we'll look at it.
You mentioned just now you rebranded Helston. You don't always rebrand. I mean, obviously, Bristol Street, which is a very, very old brand, you're doing some rather lovely advertising around it at the moment. What goes into considering whether you hold on to a brand name or not?
Well, Bristol Street Motors in England and Wales is the brand actually that has more awareness in the general public. It's been around for 100 years. We've grown it quite substantially. So it's a very nice brand. And as you say, the advertising goes into that history around actually the West Midlands in particular. So we won't, it's got 54% property brand awareness. It's a fantastic brand. The Macklin brand in Scotland is specifically for Scotland, and I think that works. And then for our premium franchises, we've grown the Vertu brand, and we do a lot of sports sponsorship marketing, football, rugby, basketball, cricket, and we're steadily growing awareness of that brand. And I think we've got 80 dealerships now under the Vertu brand.
Now, you work with most of the world's major car manufacturers. Are there any in this country where you'd really be looking actively to grow market share?
Yeah, I mean, we've grown substantially actually with Toyota in the last couple of years. We've got somewhere where we're underweight. We clearly look at the manufacturers and assess, Have they got the financial firepower to invest in electrification? What are their strategies? But we represent more brands, manufacturing brands, actually than anybody else in the United Kingdom. We've got good relationships with them, and we're happy expanding with pretty well all of them.
All right, Robert, we've got to leave it there, I'm afraid. Good to talk to you this morning. I know Results Day is very busy. Appreciate it.
Thank you. Bye-bye.
Now we're going to stay with cars because the French car maker Citroen has set itself a target of achieving 30% of its sales from outside its European heartland by 2025. To that end, Citroen, which is part of Stellantis, is targeting India as one of its biggest growth markets. And that was why it chose New Delhi as the location for the launch of its newest model, the C3 Aircross SUV. I've been speaking with Citroen's new chief executive, Thierry Koskas.
India is first a growing market. We think that very soon the market will reach 5 million units. And on top of that, Citroen is a new brand in the market. We introduced the brand in 2019. We have a strategy with one new model every year. We started last year with a hatchback, C3. This year, today, with the new C3 Aircross, a brand new SUV. Next year, where there will be a third model. All the three models have been designed, built, and engineered in India. So it's really a new opportunity and a new frontier for the Citroen brand.
And why have you chosen the C3 Aircross as being the spearhead for this assault on the Indian market?
Well, the Indian market has a great appetite for SUV, mid-size SUV. This vehicle was completely designed and engineered in India. Actually, that's a world premiere. This vehicle is presented today in India and also in Latin America. And all the car has been designed and adapted to the Indian taste and the requirements of the market. We are here in the heart of the market, mid-size SUV. That's more than 10% of the Indian market, and that's where we want to be.
And will there be all-electric versions of this available?
At the moment, we go for a petrol version because this is what sells in India. No decision for electric, but you know that the previous model, the C3, the first model we introduced in India, has been electrified. Actually, 6 months after launching the car, we introduced the all-electric version that we sold at the beginning of the year with great success. We think that electric cars has a great future in India because it very much fits the usage of the cars on urban and suburban area. That's why we wanted to be one of the first manufacturers in this market, which we did with C3. So no plan for C3 Aircross, but more to come.
It's quite a crowded segment of the market. You're up against the likes of the Volkswagen Golf, the Toyota Corolla, the Renault Megane. What will give you the edge, do you think?
In the SUV market in India, there are very strong competitors. What makes the offer unique is we have an SUV with all the DNA of the Citroen brand, particularly when you see the car, roominess and comfort are absolutely unmatched in the segment. One of the key features that we are also offering is we have a 5-seater version and a 7-seater version, which is unique in the segment. So we will be the only ones to offer such a feature.
Now, your European sales last year fell by around 16%. Are you optimistic that you can turn that around relatively quickly?
Yes, we want to turn that around as quickly as 2023. The Citroen brand deserves a much better position in Europe. We have started to remobilize our network in all the countries. I can tell you that the first results are there. We are progressing in our home market in France, in other markets as well. We have great offers. We have a very fresh lineup with electric cars, with petrol cars, and we think that we can very soon go back to the position that the Citroen brand deserves in Europe.
What have you made of attempts by some countries, particularly Germany, to get the EU to water down their targets on electrification?
Well, we are obviously heavily pushing the electric cars in all Europe, particularly one of the flagship we have on the electric market is our EC4. that is a core hatchback in the middle of the segment. We are heavily pushing that. We also offer electric vans, which are so important, particularly for the German market. So we have an electric strategy that is very bold and that is very promising in the European market.
And how about the supply chain issues with which all car makers were grappling over the last couple of years? Are those starting to make life easier for you now?
Well, we had obviously in the past year many crises to face, supply chain issue, particularly on semiconductors. What we can see is that there is an improvement in the first part of the year 2023. Situation will further improve in the second part of the year. We aim that most of the crisis will be behind us by the end of 2023.
Time now for a look at this morning's business pages, and the Financial Times leads its print edition with a report that the compensation bill for those affected by the NHS contaminated blood scandal could reach £10 billion. It also reports on its front page that big airlines are having to invest heavily on cabins and lounges amid a boom in demand from leisure travellers for first class and business class flights. Well, the Times leads its business pages with a report on the blockbuster $40 billion order placed with Boeing yesterday by Ryanair for up to 300 new short-haul 737 MAX 10 jets. The Times also reports on its business front page a warning from the investment bank Goldman Sachs that European gas prices could rise in the second half of this year and nearly treble from present levels in the winter. There's also a very in-depth piece in the Times this morning on the woes at Purple Bricks, which we touched on in this programme yesterday. Meanwhile, the Daily Telegraph leads its business pages with a report that banking startups and building societies risk being forced to set aside hundreds of millions of pounds of customers' money under plans to shield taxpayers if there is a new financial crisis. That's according to the Telegraph, looking at something under consideration apparently by the Bank of England. The Telegraph also reports, fascinating story this, that Ireland is to set up a sovereign wealth fund using the proceeds of corporate tax receipts, which have been swollen by its ultra-low corporate tax rates that have attracted global giants such as Apple and Alphabet, the parent, of course, of Google. No time for a paper reviewer today, I'm afraid, but a reminder for you to check out the Ian King Live podcast. You can find that by scanning the QR code on your screen right now. It's available now wherever you get your podcasts, including the Sky News app, Apple and Google Podcasts, and of course, Spotify. Well, still to come here on Ian King Live, esports fans prepare for the first major Fortnite tournament here in the UK. Don't go away.
They are overwhelmed just like we are, and the thought that they might have more and more work coming their way is something that doesn't fill them with tremendous excitement. I think there are some things that can be dealt with very easily on the telephone. I think uncomplicated urinary tract infections in women is the perfect telephone consultation, and it doesn't need a pharmacist or a GP. That can be done very easily and straightforwardly. So I think the message is very mixed as far as we're concerned, and it all comes back to this whole issue about capacity, doesn't it? We are overwhelmed. General practice is overwhelmed. My pharmacy colleagues are overwhelmed. They remember the terrible times during COVID when really they were the only open face-to-face clinics around because we were all shut, not seeing patients face-to-face. So they do an amazing job. And yet I gather that hundreds of them are closing each year because they just can't make ends meet. I can tell you that in our first half hour of opening this morning, we took 174 calls. At one stage, 45 people were waiting to see us. I'm pleased to say that we've got the call queue down to 15 now, 250 calls in. But it is hard work doing this. And yes, digital phone calls are very good at producing a queue, but you've still got to provide the stuff that patients need once they've made the phone call. At the moment, it's the average 10-minute consultation is an impossibility. A very droll GP, one of our rags, actually worked out that you could actually spend an hour and a half talking to somebody about something not very complicated. Every patient that comes to see me, I think, is thinking that's the last time they'll ever go and see me. And so they're planning for the rest of their lives. So consultations are very long and very complex. And then the demand is so huge. So we have a huge capacity issue.
Global insight, made local. Invest in your future. Sky News Financial Reports, sponsored by Interactive Investor. Invest in your future. Sky News Financial Reports, sponsored by Interactive Investor.
Welcome back. Now, in just over a month from now, the popular video game Fortnite will be staging its first major tournament in the UK. The McEwen Hall in Edinburgh will be playing host to leading esports stars from France, Denmark, Serbia, Canada, Norway and the UK, competing for a £100,000 prize pool in front of a live audience, and many more people will be watching on streaming platforms such as Twitch and YouTube. The event is called Red Bull Contested and it's sponsored by the energy drink. Well, joining me now is the sports director for Red Bull Contested, Rino Mamitagic. Rino, very good morning to you. Why hasn't there been a major Fortnite contest in the UK before now?
Good morning, Ian. Thanks for having me. I think there's been lots of Fortnite events around the world lately, and it has just emerged. Also, due to COVID, there has been an absence of offline and LAN events. And now, with the change in the scene and offline events coming back, I think this is a great time and opportunity to have the first big major offline LAN with the Red Bull Contested in Edinburgh.
And how big will this be compared with other Fortnite-related events like the Fortnite World Cup?
In terms of the players, it's definitely one of the highest competitions that we've seen in a long time. It's 100 of the best players from around the world will be competing. We've invited players from all across the world to participate. The prize pool is £100,000 for this one, so it's a bit smaller prize pool wise, but I think the competition and the level is definitely higher. Also, the game has emerged a lot the past 5 years, so it's going to be a more mature tournament than it was before.
And you are also offering some wildcard places. How many of those are available?
I think right now we're doing the final invitations. I think there will be between 10 to 20. That's our hope. That there's going to be qualifiers for that. And I'm looking forward to seeing who will be able to qualify from the UK.
Why do you think the popularity and take-up of esports in the UK has been slower than in some other countries?
I think we have had the same issue here in Norway. We've been kind of behind the rest of the world, following up and the global emergence of esports as it came. Esports has been around for over 20 years now. It started in South Korea and the United States, and I think UK has picked up significantly, especially in the last 5 years. And now since COVID, we've seen some major events. Red Bull Contested is one of them. We've also seen events like Red Bull Homegrounds, which is a major Valorant event. We also have a tournament going on right now in the UK in London at the Copper Box Arena, which is a mid-season invitational League of Legends. So I think it's growing very fast, even though it's been a bit slow to pick up. I think it's also a great time to get into esports right now. We're also seeing lots of major teams in the UK who've come to the scene in the last years, and lots of famous people, footballers who have been a part of that. So I think the timing is good right now, and yeah, I look forward to seeing the emergence of the UK scene.
Absolutely. I think you've got some of the Manchester City esports team playing, in fact, in this tournament.
We do indeed. As a Manchester City fan, I'm very happy to have them there. It's going to be really good. We also have other players from other famous teams from all across the world, so it's going to be an absolutely fantastic tournament.
And what made you choose Edinburgh as the venue?
I think Red Bull has been working a lot to make this the best possible experience for the players. This was all about the players when they came to me and approached me to be sports director for this one. They said, hey, we want to have an authentic and cool experience. We want to do something unique in Red Bull style. And I think the venue just came off as something very untraditional for Fortnite. Traditionally, when you see esports events, it's a very like modern arena, and McEwen Hall is absolutely different than that. And it's a fantastic venue that I think is going to give a completely different flair to the Fortnite scene. And I think the mix of those two worlds is going to be very interesting and make it a very cool tournament for the spectators.
For people who don't necessarily know about Fortnite, does it require a different skill set from other video games? I mean, if I'm very good at FIFA, does it automatically follow I'll be good at Fortnite?
Not necessarily. I'm a FIFA player myself. I'm not that great at Fortnite, even though I was leading the Become Legends, one of the top global teams who won the last global championship. But I think Fortnite is a way harder mechanical game. It has an easy accessibility, so anybody can jump in and start playing it. But I think it's very hard to master. It's a very complex game with lots of different mechanics, like building, which you don't have in FIFA, obviously. So it might take a few rounds, but now it's becoming more and more accessible. There are several game modes that are open up for beginners like you and me who make it more easy to play. So it's definitely a good game to get started on.
It looks as though, I mean, looking at the profiles of some of the players that you've got, the top players in this competition, they all seem to be more or less exactly the same age. They're all around 19, 20.
Yeah, definitely. I think like Fortnite is the first game that kind of opened up esports to a global audience in a way where it has an accessible and open landscape. Traditionally, esports has been kind of a bit of a closed off, like it has very strict, like from the grassroots to the top level. And Fortnite, when Epic Games came with Fortnite, they were like, okay, we're just going to have a completely open ecosystem where everybody can compete. And I think Fortnite is also the first esport that many young players are playing. So it kind of, they started when they were young and then they progressed as they grew up. And I think it's fantastic to see that openness and that open attitude that Epic Games has had to Fortnite. And I think that has made it very accessible as an esport. That's why we have these young talents who have now been playing for the last 3, 4, 5 years since Fortnite came out in 2017. So I think that's one of the reasons.
And how are the tickets selling?
I'm not sure. I hope it's good. I really look forward to it. So hoping to get the place packed. Either way, I think it's going to be a sick experience for everybody in the crowd. It's going to be a great experience for people on Twitch and tuning in from all around the world. So I look forward to it.
All right, Reno, got to leave it there. Appreciate you joining me today. Thank you.
Thank you so much, Ian. Have a good day.
That's it from me. I'm back at 10 o'clock tomorrow morning. Hope to see you then. In the meantime, do stay tuned. After this short break, Jane Secker is up with all the build-up for Prime Minister's questions. Thanks for joining me today. Cheerio.